Mute. All right. Good morning, everyone. Good morning. And thank you for joining today's webinar on the topic Preparing Your Business for Invoicing, Technical and Operational Consideration. My name is Oluwakemi Gbadebo, and I will be your host for this session. Now, today we're going to be discussing what e-invoicing is, why it matters, and how businesses can get ready for the upcoming implementation by the FIRS. Whether you're hearing about this for the first time or you're already in the pilot phase, this session is designed to provide clarity, practical steps, and answers to key questions surrounding compliance, readiness, and implementation support. We're also going to be hearing from our experts, and we encourage you to share your questions in the chat box. You will notice that you don't have an audio. It has been disabled. So please, any question that you have, please put that in the chat box, and then we'll collate the questions and address them during the Q&A session. So to officially open today's session, it is my pleasure to welcome our partner and head of tax KPMG Africa, Wale Ajayi.
Thank you so much, Kemi. Good morning, everyone. I think it's very important for me to have my warm welcome. And I'm so excited to have you join us today, at this webinar. For me, there are three key objectives that we want to achieve with this webinar. I think the very first one is to demystify the concept of e-invoicing. Everybody has been talking about e-invoicing, and people are asking, what difference, does it make? And I think the second objective for me is for our participants to understand the requirement for e-invoicing and also assess the state of the readiness, for the implementation. And the third thing, of course, is to support the FRS in the implementation of the e-invoicing initiative. And so we have carefully selected, our speakers that will share their perspective and their insight on e-invoicing and how businesses can be ready for that. But just before I go on, I guess the question on the mind of people is what exactly is e-invoicing? So when you're talking about e-invoicing, we're just talking about the process of issuing and sending invoices electronically. That is what e-invoicing is all about. Sending your invoices and receiving your invoices electronically rather than using the paper-based methods of sending invoices. And the question, of course, is so are there objectives, that we accrue to me as a business or to the tax authorities? I can tell you that there are several objectives, and I'm sure that our speakers will unpack those objectives. But let me just whet your appetite a bit. Now, because we're talking about e-invoicing, what it does is that it leaves a digital trail. And what that means is that you are able to verify and validate, revenue information. I know from experience, on audit and investigation, one of the causes of disputes between taxpayers and the business or, and tax authorities is always what is revenue, right? We always fight about, have I declared the right revenue? Now with the invoicing scheme, right, that would be an issue of the past. You don't have to spend so much time disputing and arguing about e-invoices. So that's one. So it leaves that digital trail. So it's auditable. And I think the second reason for me, it's about the efficiency. We all know that anytime you automate a process, right, it makes our life easier. What it does also is that it helps you to reduce the time you spend in processing your invoices. And I think the third thing for me, it's all about cost savings, right? You don't have to start, spending money on paper. You don't have to start printing your invoices. You don't have to start mailing your invoices. So you reduce the time, the effort, and the cost that you spend on invoicing. And of course, because of the way e-invoicing works, it enables faster payment. And when I think about that, right, because the invoices have already been validated, so you don't spend time disputing or asking, is the invoice correct or not. So payment is faster and then it improves your cash flow. But I think one of the biggest objective for me or for e-invoicing is that it can help us to develop a debt factoring system in Nigeria, right? So you don't have to be waiting for a time when your invoice is due before you receive payment. All you need to do is that once you've created an e-invoice, you can upload it, to a factor platform or a third-party service provider who can verify your invoice, validate it, and they can actually pay you way before your invoice is due. They give you a percentage of the money that is due, and on the due date, the factor way to collect the money from the debtor, right? So you're able to collect your money in time, of course, less some charges, right? So those are the benefits that e-invoice will provide. So I guess for me, the question would then be that at the end of this webinar, the quick question you should be asking yourself is how ready are you in terms of your preparedness, right, for e-invoicing implementation, which the FRS has said is going to be sometime in July, right? And so for us, when you look at what we do in KPMG, we inspire confidence and we empower change. And we really will be willing to help you, to confidently, implement your e-invoice solution. And that's the reason for this invoice, for this webinar. So hopefully there's a lot for you to unpack. And hopefully also at the end, you can confidently say that you really understand what e-invoicing is all about. So let me thank you once again, for joining this webinar. Please just sit tight, relax, and take in all that we want to offer about e-invoicing. Okay, so thank you so much. Let me hand over to Kemi at this point in time, and then she can take you through the other aspects of the program. So welcome, and thank you for joining us at this webinar today. Kemi, back to you.
Thank you so much, Wale. And thank you for that opening remark and giving us an overview of e-invoicing and its upcoming implementation. I know that there are three things, or better still, four things that I got, is the fact that e-invoicing is going to leave a digital trail. E-invoicing is going to automate processes, is going to save cost, is going to ensure faster payment, and is going to bring forth this debt factoring system in Nigeria. I can't wait to hear more about e-invoicing. So before we get into the heart of today's session, let's start with something light, to warm us up. So you would see a QR code on the screen, and that QR code leads to, a bit of warm-up questions. We'd love to get to know those who are present with us in the audience today. This Slido poll is going to be live. And so please take a moment to scan the QR code on the screen while we wait for more people to join the session. So we're going to give 2 minutes for people to scan this QR code and then fill in the questions while we display the results on the screen. If you're unable to scan this QR code, there would be a link in the chat, so you can just click the link. Okay, so we can see that a number of us, 57% of us are morning people. Great, I think I've seen my people on the call. Okay. We see that 42% of people are aware of the e-invoicing initiative. Interesting. 32% are not aware and 26 are partially aware. Great. That means this webinar came at the right time. It came at the right time. So we can see that a number of us are actually aware of the e-invoicing initiative. Okay, okay. Let's keep filling in. Let's keep pouring our answers in. So I think our 2 minutes is up. Our 2 minutes is up. But we have another Slido for you. We have another poll for you. For this, we would want to gauge your understanding of e-invoicing as well as the implementation process that you're in. Now that would be put on the screen shortly. Someone commented, I can't scan. Okay, for those who can't scan, there'll be a link in the chat box. You can scan with your phones. You can scan the QR code with your phones. I see that many are having issues having to scan this QR code. You can scan with your phones, and then it will take you directly to the form. Let's just give another 2 minutes while we see the results on screen. Okay, so we see that a number of us have not started implementing e-invoicing. Okay. Actually, majority of us have not started implementing invoicing. Yes. Ooh, 92%, 93%. Okay, we have one more minute before we move into the presentations proper. All right. We see that a lot of us are not sure of our pain points with respect to invoicing, but this is all fine. This is all fine. So we're going to be going into the presentation proper. And to start the presentation, our representatives from the FIRS. Let me just share their slides first before bringing them in. Okay. All right. So now that we are warmed up, and thank you so much, everyone, for your responses. We see that a number of us are actually aware, and we see that a significant number are partially and not aware of invoicing. So to understand the invoicing framework better, I'll call on our first presenters, Mr. Sadiq, who is the lead consultant for FRS MBS and the head of strategy and innovation, Diakubin, and Mr. Mohammed Bawa, who is the invoicing project manager from the FRS. So sirs, please, you can come online for your presentation. Please welcome them, everyone.
Hello, good morning, everyone. Am I audible?
Yes, yes, you're audible, Mr. Sadiq.
All right. Good morning, and thank you for joining us today. My name is Sadiq Aogundade, and I have Bawa Mohammed with me on the call today. We are pleased to be here to share insight on the Nigerian's journey towards e-invoicing and what is meant for your business. You all agree with me that the world is going digital, and countries are now digitizing how taxes are filed, how invoices are sent, and how compliance is tracked. From Europe to Latin America to part of Africa, invoicing has become the standard. And now the federal government of Nigeria have now officially joined this global shift with the launch of a central system for managing e-invoicing in Nigeria. So the e-invoicing in Nigeria is branded MBS, which typically means the merchant buyer solution. Before we go deep into the presentation, I would like to walk you through the what e-invoicing really means, the standard that we have adopted, how to evaluate your system readiness, and the key steps to onboarding. Then more importantly, we'll talk about how businesses can turn these mandates into measurable business value. Let's ensure we are aligned on the basic terms with the national invoicing ecosystem. What is the invoice? The invoice is a structured digital document that is issued, transmitted, received digitally, and also stored. You can also archive these invoices on your own ERP system. The electronic invoicing today is not, please, can you go back to the previous slide? All right. The e-invoicing today is not your PDF document, your Word document, your JPEG that you attach in your email. It is those are not considered as e-invoice. What it's considered to be e-invoice is an XML or a JSON format that is standardized, that is structured at the back of your system. If you can see an example of a period, the period is a timestamp. It is typically an ISO format of timestamp. It is not the usual time format that we are used to today, where you have the 10:20 p.m. or you have 11 p.m. And the reason why these standards are important is because of how time has been formatted globally. So if some years start first, some countries adopted date, month, and year, some adopted year, month, and date. So the e-invoicing standardize all of these anomalies in data interpolation. So you are able to have a structured format that is interoperable and can be exchanged within multiple system across several ERP solutions. So that's what is considered to be invoicing system. It is typically the data in raw format on your system at the back of your hardwares before it is rendered visually for user experience. So that's what is considered to be e-invoice, not your PDF or your JPEG system that you attach today. It's typically a data structured in a language that is considered to be XML or JSON. We'll get into the details of what this means as we progress. Next slide, please. Now, we also have the e-invoicing solutions within the e-invoicing initiative. Your QuickBooks, your Sage, your Oracle, your Microsoft system, your SAP ERP solutions, your accounting system, whether it is customly built or it's part of the Big Four, are considered to be electronic invoicing solution. Your electronic invoicing solutions are accounting systems that are installed on your PC. As example, the a Microsoft F&O, your hardware machines, your POS terminal, your cash registers are also considered to be electronic invoicing solution. So basically, your electronic invoicing solutions generate e-invoice for you to be able to transmit among different systems without too much human interference. Next slide. Then we have considered two kinds of invoice. One is the simplified tax invoice, and the other is the tax invoice. The simplified tax invoice are the invoices that is considered to be in the category of a business to customer invoice. It's we know them to be as receipts. So when you buy goods from large supermarket, for example, a ShopRite or a Spar, you are issued those thermal paper documents. Those are considered to be simplified invoice. It is simplified because the customer's address are not on that kind of invoices. Your phone numbers are not always there. What you just have is the merchant information, their logo, and it carries some description of what you have purchased, the tax element of it, and the total amount that you have paid. So those are simplified tax invoices that are printed on your POS machine when you paid for consumables. So those are business to customer kind of invoices. Next, please. Then we have the tax invoice. These are typically your A4 kind of invoices, and they carries the description of goods. They carries the buyer's information and also the merchant information as well. It has all the full tax element of it. It allows you to brand it. You can also do that on the simplified invoice, but the tax invoice has more details than the simplified invoices, and we follow the PINT model of the purpose standard. So there are three, and it's considered into three categories of the invoice SOA. So there is the shared, there is the aligned, and there is the distinct. The shared are common to components that are used across all invoices, like the invoice number, the date, the tax amount, and also you could also have your bank information on top of the shared element. So this is what is considered to be shared. And we have the aligned, which are basically invoices specific or mandatory regulatory elements that needs to follow a standard format, but can be adapted slightly. So these are your tax components, the VAT on the invoices. Then we also have the distinct. The distinct is about 5%, which is business unique fields that reflect your internal need or custom use case. Let me explain that a bit more. So the invoice X-ray, the distinct part is where you could customize your logo, you could put your buyer's information on the side and put your supplier's information on the other side. So you are able to play with this header. You could brand it, you could add a lot of information to it. Then we have the shared component that has the description, the quantity, the unit price of those invoices. So you are able to control all of these based on your specific business use cases. Then we have the align, which is typically 15% of the invoice components. That's where FIRS is plugged into. That's what FIRS picked today, because this represents the applicable VAT rates and also the tax amounts. And this invoice, this kind of tax invoice is considered for the B2B use case and also the business to government use case. So when you are a government supplier, you can also use this kind of invoices. Next slide. Then we also have the IRA number on the e-invoicing initiative. The IRA number is unique identifier assigned to each invoices. They are used to track and validate the invoices in every invoice electronic system. It ensures authenticity and also traceability of the invoice throughout the entire invoicing process. The IRA number has a prefix of your invoice number. The invoice number that you see at the beginning of this IRA number, it's the invoice number that you generate on your machine. It doesn't have any character limit. So you still have that flexibility to control this within your ERPs or accounting system. So you controls what the invoice number is. Now you have the service ID in the middle. The service ID is issued to you by FRS when you enable yourself on the e-invoice. And lastly, it has a timestamp. The timestamp is also in the ISO format. So you are able to also manage all of these within your system. You don't need to call the FRS system when you want to generate the IRA number. You could generate this offline. So there are guidelines, there are procedure that you can follow on the website now that allow you to generate this IRA number offline. So when you generate the IRA number, you can append it to your invoices so that it enables us to do our lookup capability, because when you want to exchange this kind of your invoice, whether it's a simplified or a tax invoice, the IRA number, it's what we would use to identify the invoice. And it is you have to configure your system to randomly generate it so that it's not repeated, it's not duplicated. And even if you do that, we handle all of those errors before you transmit those invoices to us. Please, next slide. Now we have the verifiable QR code that follows an elliptic curve model. What we have done is when you generate an IRA number and you append it to an invoice today, it's for us to maintain that integrity and authenticity of that invoice. We've employed a verifiable QR code that follows a PKI model for you to be able to append your signature. This is typically a form of an e-affidavit. So you are able to generate an IRA number and then sign it with a cryptography that originates from the FIRS server when you enable your invoice. So this is how it works. So you generate an IRA number on your ERP, and then you transmit it to FIRS for signing. And how do you sign this invoice? When you enable yourself on the FIRS system, you are able to download your key pair. So you have the public key and the private key, and you can use the combination of this to append a digital signature on top of this IRA number that becomes a QR code. This QR code is only scannable by an SDK that we've also made available. So we have a mobile app that the buyer can use to scan this QR code to verify that this the e-invoice that you have issued to them, it's valid and it originates from a verifiable business that is enabled within the FIRS e-invoicing ecosystem. So the IRA number serves as a secured, a tamper-proof mechanism for e-invoice validation and also fraud prevention. an IRA number that is, I mean, a QR code that is appended to an invoice cannot be recreated. So these allow you to typically have what you do today traditionally by signing your invoice when it is being issued and you scan it. So this is more secure. When you have an IRN number on your invoices, you can append the QR code, whether it is simplified or a tax invoice. You can append those QR code on the invoices and it becomes authentic. And this can only be done either offline or online, so which typically means real time or near real time. So for a case of a simplified tax invoice, you can do this within your ERP system or your POS. They have that capability to be able to append a cryptography stamp on top of the invoice when you have generated an IRA number. And for a tax invoice, you can also do this without calling the FRS endpoint to append the signature. Because remember, we have given you a key pair. You have the private, you have the public key. So you can use your private key to sign, and you can use your public key to decrypt. When you sign an IRA number with the QR code, it is only the buyer that the invoice is meant for, which means that it is only the beneficiary of that invoice that can decrypt this, that can decrypt the value and the details of the invoice. Next, please. Now we have two models that we have adopted. So we have the two models of the continuous transaction control. So we have the clearance and the reporting model. So for a business to customer, we've adopted the reporting model. Reporting in this case means that you are able to do your business and then report the transaction later. This enables merchants to be able to manage high volume customer transactions. For example, a ShopRite that needs to do their business and then transmit invoice at the end of the day. So we've typically looked at the peculiarities of Nigerian ecosystem, and we've seen that you cannot rely on internet 100% for you before you can be able to do your business. So what we have done is to allow you to continue to do your business and then report the business, your invoices at the end of the day. And it's typically a four corner model as well. So on the corner one, for example, it's Sadiq, and I'm trying to sell a bottle of Coke to Chioma on corner two. What I do is I use my e-invoicing solution. Remember, your e-invoicing solution could be an hardware or a software, but in this case, I use an hardware system that allow me to issue a paper receipt. So I've sold the bottle of Coke and I've issued a receipt to Chioma. Chioma has a mobile app which is called the MBS 360. You could use this to scan the invoice to validate it. And you could also use it to archive my invoice for me to track my expenses. What do I buy? Maybe I bought a chair from Vento, or I bought from LiveMate. I could scan those invoices and keep it because I could qualify for a tax refund, or I could also qualify for a VAT lottery. So I could keep that if I want, and I could throw it away if I don't want to keep any of those things. But it's important to track your transaction so you know what your expenses are. So when you do that, automatically FRS have an enabler, which typically are access point providers and system integrator. Your system integrator has supplied you an electronic invoicing solution. So in this case, a money point has given me their hardware. A money point is considered to be a system integrator, or I'm using Ingenico or Honeywell system to issue a receipt. Automatically, the system must have been integrated to an access point that can report that transactional data for fiscalization. Remember that we mentioned that there is a 15% aligned component of the invoice that is FRS data that we need to collect. So the access point provider enable us to pick those tax data, and you are fully compliant by doing this. So the merchant can report the invoice to FRS real time or near real time. So you have the flexibility to do that today. Next, please. Then we have the business to business use case. For the business to business, we've adopted the clearance model. We believe that there are several benefits from the beginning of this webinar. You've listened to what Adewale have mentioned around invoice financing and discounting, all of those credits advantage that the e-invoices present as value to your business today. So for us to be able to enable all of that and then mitigate fraud and allow business efficiency, we've adopted the clearance model, and it's typically a 4 to 5 corner model. Then I'll use same Sadiq, and let me use Choma Enterprises in this model. So I use my Microsoft F&O to issue an invoice, which is also could be an electronic invoice solution. So once I generate that invoice, there is an access point provider that allow me to be able to exchange those invoices. Remember, today, there is no exchange mechanism on your electronic system, invoicing system. When you generate invoices on your QuickBooks, when you send, it's over the internet. You can attach it to an email and send it. But what we are doing is we've also considered how these invoices are exchanged. We've looked at how you create invoices. We've tried to make sure that it is standardized, and we've declared standards and guidelines for you to be able to generate a standardized invoice. And also, we've also considered to make sure that we create a secured invoice exchange ecosystem. So when you generate those invoices, you can rely on the service of an access point provider for them to help you do a lookup capability of the destination of those invoices. Then they can send that invoice to the buyer's access point provider. In this case, Choma's Enterprises, or it could be Sepla that I'm trying to supply diesel to. So once I generate the invoice on my electronic invoicing system, it automatically transmits the invoice to them and notify them that they have an invoice that they need to fulfill for payments. Once this has gotten to the corner 4 of the buyer invoicing system, they have 72 hours to acknowledge the invoice, and I also have same 72 hours to cancel the invoice. Once the invoice gets to the buyer can acknowledge and fulfill payments. We will automatically get the notification that the payment has been done. You still have few more time to be able to make corrections to that invoice. While we're having our stakeholder engagements, there are taxpayers that have also come to us and asked for a 3-day window for them to be able to cancel the invoices. So we've also looked at that at the back of our strategy to see that we could accommodate you to be able to still correct these invoices within those windows. While you are doing this, tax happen automatically, and this is typically a data only ones. You don't have FRS officials coming to your office to do audits or to try to checkmate what we have done. Automatically, we know what your businesses are already doing, and we are able to pick all of those tax data automatically at the back of the system. So e-invoicing is typically not just about digitizing invoices. It improves your reconciliation, enable faster payment because it moves from your ERP system to the buyer's ERP system and it notifies them. We've seen banks that have integrated this e-invoicing solution for them to be able to do a lookup on invoices and alert you that you have a new invoice, and then on the click of a button, you could do payment instantly. So it enhances trust and unlock financial opportunity, especially for the SMEs. This can be a game-changing initiative. So the Nigerian model, both the clearance and also the reporting model, is built on a secured interoperable global standard, which is the universal business language. The invoice structure and the S3 that we've explained is typically a UBL format. So the invoicing is paper ready. It has the IRN component. It has the QR code cryptography stamping for authenticity, and it's paper ready for international compatibility. So this is the future of proofing our tax ecosystem. So you don't need to worry about how the taxes happen, but it still did not the e-invoicing ecosystem system did not is not going to restrict you from doing your compliance, your filing as well. So it is flexible. You could also trigger some reassessments once we tell you that this is what your VAT element is, you have the ability to do your filing and also to do your assessment. So you could dispute the data that we have, come up with your own evidence. So it's important that while you're generating those invoices, you also store it and archive on your system. So this is the model for business to business, and it also qualifies for business to government. So the government can be on the corner 5. You generate the invoice the same way you generate it between businesses, and then it is standardized and it is purple ready. Next slide. All right. So beyond compliance, the e-invoicing also allow you to be able to manage your internal operation efficiently. So it's not just FRS connecting to your system. The first thing first is standardizing how invoices are done, unlocking more opportunities for businesses that want to also interact and then do more businesses with you. So this initiative allow you to be able to ensure that your accounting system is also ready. So we've built an 100% RESTful API. So you are able to integrate this system without completely doing a full change management. So what you just need to do is to make sure that your system is ready and you integrate directly into it. So you are able to have real-time insights, and also data integrity is also key, because we follow the product harmonization code, where we don't care about the brand name. It doesn't matter what you call your product or what you have defined to be your service. So there is a product harmonization category that we use to make sure that we checkmate all the products and make sure that it is standardized across the entire ecosystem. Now, the product harmonization could also allow us to be able to know what is vatable, what is zero weighted, and we would automatically be able to know how the VAT input and output is computed, meaning that we are also looking out for the merchant and the buyer. So when you buy and you suffer the withholding, we have a clear data insight to what it is due to you for your WHT. So you are able to make those claims without too many friction as your worries are today with the tax administration system. So these also help faster payment and reconciliation. I'd mentioned that it's an API service that you can integrate directly into all of the components of the e-invoices system. It is decoupled. Banks can integrate it and enable payments fulfillment. There is also access to finance. The IRN number, it's interoperable. It is intelligent. You can do a lookup to verify the authenticity of invoices. You can, and there is there is a purpose limitation there, where when you transmit the invoices to the buyer, it is only the buyer that can see it. However, you could decide to control the invoice for other member stakeholders within the invoicing system for them to do a lookup. I'll give you an example. So I supply Dangote diesel and they are not able to pay me now because I have an LPO of 90 days. I could take that invoice, throw it into the money market for invoicing financing, so that I can be able to continue to do my business and then supply another buyer. So all of this today, there's a lot of challenges because of the authenticity of invoice, and there is no source of truth. So what we have built now is to create a source of truth, an ecosystem where there is trust, where all business and all members within the invoicing initiative trust each other. The IRN number can be valid. FRS is now has appended the signature on the invoices so that businesses can interact among each other. So we've made sure that we've also adopted a global and secure standards. The UBL, which is the Universal Business Language, you don't need to worry about this. Many of your invoicing solutions today already conform to the UBL format. What you see today are just visually represented images of an A4 paper, where you just add your buyer, you add your description of goods and your tax elements. Some of them have even automated it so well that you just do a quicker data inputs, and you have the invoice generated. So it's already UBL standardized. Then we have the cryptographical stamp identifier, which is the CSID. The QR code is not just a QR code that takes you to a link. It's actually a basis, the first signature, where it is verifiable only by whom the invoice is issued to, or whomever you have control to be able to see the invoices. We have the IRN number. It provides unique identifier for all invoices. Then it's also a secured, there's a secured API that follows an AS4 protocol for us to be able to manage how invoice is being exchanged between systems. So you are not transmitting, you are only putting the invoice in the central depository where the buyer can do a lookup. Then we've also adopted the public key infrastructure. So you have two key pair. When you enable yourself on the e-invoicing system, you get all of these details and you're able to manage this. I'm sure the technical people on this call will understand what we mean by the PKI. So this is a journey towards a digital public infrastructure. So once you have secured your invoice within your organization, you have the ability and the autonomy to be able to control who sees your invoice for more business insights. And credit scoring, credit rating on your business is also enabled. It's a lot of data for predictive analysis on how businesses are being done within the country. And the Nigerian government that itself is also waiting for this to be fully adopted, so that we'll be able to also manage consumption in our country, to know what people are buying, where government needs to invest more, and where government also needs to enable all more businesses, and also ensure that the ecosystem is secure. Then the e-invoicing is PEPL enabled. If you decide to use PEPL for your invoice exchange, we have access point provider within the network that are PEPL enabled. You could switch to their service, and they will enable you to do that cross-border invoice interchange. We have the LAI number, which is the legal entity identifier. The reason for this is so many businesses outside the country that you do trade with today do not understand what your RC number or your BN or incorporated trustee number. They can't resolve that. But the invoicing system is integrated into the LAI Resolve API, so that you can resolve any LAI number. If you have it, we can resolve. If you get it, we can also interpret it. We have the World Custom Organization. We've seen a lot of challenges and complaints from taxpayer about withholding VAT claim. So we've made sure that we confirm that product harmonization code, so that we are able to track the VAT output and the inputs, so you get what is due to you. And we also make sure that there is a separation of concern. So our business is taxation, and we focus on the tax data, while we make sure that data security, compliance, standards, and also the entire ecosystem is sanitized by the authority that has the capability to do that, which is NITDA. So NITDA today is the PEPL authority in Nigeria, and they are making sure that the entire members of the ecosystem adhere to all of the international standards compliances. So we have the ISO 2700, which is information security. The entire members of this invoicing initiative conform to that standards. And then we also have the ISO 222 compliance as well, which is the financial messaging standard. I'd mentioned that it's a journey towards digital public infrastructure. So we have that model that allows banks to connect to the system for payment fulfillment. Now, in terms of readiness and evaluating your ERP and accounting platform, so the first thing first is to first verify that your accounting software can generate and consume invoices in JSON and XML format. This is a check for us. We have, during our pilot, we've seen that 99% of the taxpayer today generates JSON and XML or UBL format, but accountants does not care about all of these at the back, but we care because we want to connect to the natural system. And I'm sure your technical department within your organization know this as well. For the accountant, it's just to drag and drop and then also click buttons. But for the technical people, they understand what is going on at the back of the system. So, and that's what we want to connect to. So you have to also ensure that it has that format. Then you also need to ensure that your system has the capability to generate a cryptographical stamp. During our pilots, we also saw discovered that 99% of taxpayer also have machines that can do this. I'm sure you must have been receiving thermal papers that have, I mean, receipts that already have a QR code that take you to a link when you scan it. So that is also checked. We have most of all your machines can generate this digital signing today, and we have an SDK that can also allow you to be able to generate this without needing to do so much. So there are libraries available online. Then there is a need for RESTful API integration. You also need to be sure that your OEMs have given you that module that allow you to be able to integrate API for real-time data exchange. You don't need to do this alone. You need to work with your OEM because you purchase those software from them, whether it's on prem or on cloud. You need to work with them towards this journey so that you are able to make sure that the integration is done correctly, and then we can then push you to live. So we've made sure that we've maintained that control where you first integrate, then we push you to live. So there's a sandbox that you can play with when you onboard yourself. Um, Please, no business should work alone on this journey. System integrators and access web provider are technical bridge between your operations and also the FIRS system. So please work with them. They are already online. They are available. They've integrated into our system to make sure that you have this checked 100%. Then we structured the onboarding into 10 clear steps from enabling your business to generating cryptographical keys and going live. The process is designed to be smooth and testable in sandbox before real operation. So the first thing first is to go to invoice.firs.gov.ng, or you go to your FIRS website. Then you can click to enable yourself for invoicing. There are a few forms that you need to fill so that we could be able to tailor the solution to your use case. So you select the industry you belong to, you put your TIN number, you select if you want to report invoice real time or near real time. You receive, once you do that, then you define your annual turnover. If your turnover is below, we know how to streamline the solution for you so that it doesn't look too much complicated for you to integrate into. Once you are enabled into the invoicing, you will get a notification in your email with all the details of your credentials to log in into the portal. Data consenting is very important. The first time you log in, you need to first check that you are giving us consent to be able to use your data. And when I say your data, it's typically the data that you have supplied when you are onboarding for us to use it for insights, for us to then streamline the system, the dashboard, so that it's tailored for you, because it's typically industry specific. What we've discovered during our pilot, that what is obtainable with the telecom is different from what is obtainable with the manufacturing industry. Then this system allows you to manage your entire invoicing processes. Processes means that you can manage your cryptographical keys, you can revoke, you can create. For a case of an hotel that have multiple hardwares, multiple systems, for banks that have different channels, you could generate different cryptographical keys. What you just need to do is to put the address, put the device ID, and whatnot. Then there is also a developer portal where you can generate your API keys. You can share with your OEMs for them to be able to interact with the system. You can add the members of your team. You can add your developers. You can add your accountant. You can add your tax auditors for them to be able to manage the system for you. Then once you've done all of that, you could also within the invoicing system, you can switch between them. You can choose a default, and then you can also manage the access that they have. You could toggle the access from them being able to download your invoice, being able to transmit on your behalf. And then once you go live, then you can start integrating. Then you can also request for a go live. Integration has to happen within the invoicing system, and it's important that we are sure of that. So the electronic invoice, it's really something that we all need to consider. It's important that we help our country to be standardized. And it's about building trust, enhancing transparency, and also enabling a digital-first business environment. It will help Nigeria to digitalize our finance, unlock real-time insight, and elevate compliance into a driver of strategic growth. So thank you for your time and your participation. Now it's time. Let's lead the change together. Let's help the country. The next slide will run you through our rollout plan, the timelines, what we need to do next, and how you prepare for the invoicing system. Bao, over to you.
Thank you very much, Sadiq, for a very thorough presentation. And I believe most of the participants have been following your detailed explanation regarding what invoicing is and the technical requirements needed to ensure this integration is done. So from the FRS perspective, I will just briefly run you through our expectation in terms of rollout timeline. Can you move to the next slide, Kemi, where you have the rollout plan? Okay, while waiting for Kemi to display the slide, I'll just briefly speak.
It's displayed. It's already displayed.
So for it's displayed. Okay, it's not.
Yes.
It's not displayed at my end, but no
and
problem.
Maybe you can use your
I
own
can
version.
just speak through.
It's displayed.
Okay, no problem. So for the rollout plan, at the FRS, we have phased out the project into two phases, focusing on large taxpayers, the pilot phase and the full-scale deployment. So for the pilot, which has been on since last year, November, will require us to pilot test the system with selected taxpayers. It's a voluntary scheme. Actually, we have some couple of taxpayers that were working to deploy the system. And during this period, we've also conducted engagement with all large taxpayers, with even tax consultants like KPMG and the rest, to get feedback in order to improve the system and to ensure that it aligns with the business needs of these taxpayers. So the pilot phase is expected in June, and then after June, we're going to evaluate the system before we now announce the full-scale deployment, which is coming up in. So all preparations are still in place. The expectation is that at the end of the pilot, we're going to announce to all large players with a turnover of above 5 billion to operation and with a specific timeline for implementation. So that is going to happen as soon as possible. So I'm sure everything that Sadiq said is something that can be validated. Some of the taxpayers that we've done this pilot with, and I'm happy that one of them is to also speak. So they are going to share their experiences on how we have engaged them, how we've been able to do this integration with them. So the expectation is not to roll out this at once to all segments. Yes, and that's why we're starting with the large taxpayers. We believe the large taxpayers have more mature systems that can that will allow us to do integration before cascading to the lower level of taxpayers. And the expectation of management is to continue to engage, take your feedback, ensure that what we have built will also with your business needs. Just like all the engagement we've had, we've taken a lot of feedback which we have used to improve the system, and we'll continue to do that. We also have internally a very robust support system to support all taxpayers. We teams with all interested taxpayers that want to do the and supported them throughout the integration process. So at FIRS, we are fully ready and prepared to taxpayers that want to do this integration with us and to ensure a smooth and also easy compliance for all taxpayers. I think that will bring us to the end of the presentation. We are going to take all your questions and concerns during the Q&A. I know you have a lot of them based on Sadiq's presentation and also based on FIRS aspect of this segment of taxpayers. So I would like to thank everyone for listening and hand over to the KPMG team to the session. Thank you very much.
Thank you so much, Mr. Mohammed and Mr. Sadiq. Wow, that was such an insightful session. A lot of information on invoicing. I know many people would have questions regarding the presentation Mr. Sadiq and Mr. Mohammed just made. Please, if you have questions, put your questions in the chat box. We'll ensure to address all questions during the Q&A session. In addition, we have actually launched our newsletter on invoicing. The link is in the chat box. So you can click on the link and then it will take you to our newsletter or invoicing. All right. So to build on what Mr. Sadiq and Mr. Mohammed have said on invoicing, we're going to be hearing from one of the companies involved in the pilot phase of the invoicing implementation, as they would share their experience implementing invoicing with the FIRS. Please help me welcome MTN Master Data Analyst, Ms. Olushola. Ms. Olushola, please come on screen.
Good morning, Kemi. Can everyone hear me and can you see me?
Good morning. Yes, we can. We can hear you and we can see you.
Okay. All right. Good morning. So I'm just going to be taking us through the experience that we have had so far as MTN implementing the e-invoicing solution and some of the challenges that we've had, as well as just things to note as either a big business or a small business hoping to come on board, or not even hoping, everyone would have to come on board sometime in the nearest future. Okay, so internally, we have quite a number of invoice generating systems. And one of the first things we had to do was consider how we were going to integrate all these channels to the e-invoicing platform. We had to decide if we were going to do a single source of truth, which would be all the invoices will be aggregated to one channel to be transferred, or we would just treat each channel as a standalone. We also had to review our existing systems, which means how we currently handle our invoices. As a big business, we have several sub-businesses that we do, and every department or every operational arm has the way they handle their own invoices. So we had to have that alignment with FIRS to be sure we're on the same page as to how transactions should be considered before they are transmitted, right? Now, as we have several channels, we eventually decided to split them into two, right? One is for our ERP system, which hosts quite a number of our invoices. About 70% of our invoices are channeled through the ERP system. And then we decided to build an integrator for the other invoice channels that we have. That will take me to the system integrator. As on your own side, you would need to decide if you also want to build your own system integrator or if you want to outsource it, right? If you want to build it, it's the FIRS technical team have been very helpful in aligning what we have built in-house to what the requirements of the e-invoicing is, right? The next thing you will need is an access point provider. What the access point provider serves to do is to ensure a safe transmission of the invoices that you have generated between you and the customer that you're sending the invoice to, as well as with the invoicing system. Again, if you're a big business, you can consider building your own access point provider platform, but it will need to be approved and certified by the international body. But for small business owners, I would encourage that you onboard on some of the access point providers that the FIRS has pre-considered and pre-approved. The other thing we had to consider was our current invoice receiving or invoice processing system, because you need to understand that the e-invoicing is not only for invoices that you're issuing out, it will also factor into the invoices that you're receiving, because again, your suppliers would also need to send you invoices using the platform. So we also had to review our current invoice processing system to see how we would need to make changes, or what changes we need to make it ready to receive invoices from the e-invoicing platform or standard. So far, again, we had to do a lot of fact finding, and we had a lot of sessions with the FIRS team on aligning. The alignment was very important, right? For instance, do you expect us to transmit credit memos? Do you expect us to transmit debit memos? How do we handle invoice cancellations or invoice regenerations when there's an error on an invoice and we need to create a new invoice? What's the process? And as Sadiq mentioned, that's one of the reasons why they've increased the timeline between when you can transmit or when you can cancel an invoice that you already transmitted. One other thing we had to consider was if we wanted to do real-time transmission or batch transmission. Now, considering the sheer volume of invoices that we issue on a daily basis, we decided to go the batch transmission route, right? Because one, we do not want anything that would impact our current system. We do not want anything that would cause any degradation in our system. We don't want anything that will cause a delay or just any form of negative experience with our customers because of this implementation. So we decided to go with the batch route. But again, considering your own business, you might need to go either the real time or the batch format. Now, another thing we had to consider was if we wanted to outsource some of the things that we will be doing, or if we were going to build in-house, and looking at the financial and operational expectations of the different options that we had available to us, we eventually decided on building in-house, which allowed us a lot of room to make changes or navigate and basically just be nimble in following through with also the changes that the FIRS team were bringing on board. Another thing that I believe that you will need to consider is just what would it cost your business in terms of financial expectations, in terms of technical resources, in terms of operational resources, and your general accounting system. Those are all the things that you might need to consider. Yeah, again, if you have any questions beyond this brief, you can please feel free to ask in the Q&A section. Thank you. Oh my God, what is wrong with you? Oh, come on, come on, come on.
Thank you so much, Ms. Shola, for this insight. Wow, this is it's a whole lot. It's very good and it's very helpful for us to be able to hear how this really works in the real world. So up next is a guest speaker by the name of Rahul Agarwal. He is a partner in the KPMG Tax Technology and Transformation Practice in India, and he will be sharing insights on how e-invoicing has been implemented in India, a country that has made significant strides in adopting a national clearance model of e-invoicing. Please welcome Rahul Agal.
Thank you, Kemi. It's a pleasure to interact with the with your team and pleasure to hear the earlier speakers that are there. From an India perspective, as you are aware that we had implemented GST way back in 2017. If you can go to the next slide, Kemi. Uh, yeah. So 2017, we had implemented GST. Under GST, the idea was to implement e-invoice. We had implemented e-way bill in 2018, which was a document required to be accompanying the goods that are being moved. In 2020-21, in a phased manner, we implemented e-invoicing, wherein each B2B invoices. So this was only applicable to the business to business transactions or export transactions in India. The details were required to be shared to the government, wherein IRN and QR code, which is similar as it was explained just in the previous sessions, would be generated by the government, given back, and that needed to be printed on the invoice by the supplier, and that invoice was then considered valid to be shared with the customer. So this started in 2021, October 20 to be precise, the first time that e-invoicing was introduced. Thereafter, it has moved quite a bit from there to the fact, as it was mentioned by one of the previous speakers, that as a customer also you would be receiving these invoices which contain the QR code and IRN, the e-invoices, and that data is something that is also relevant. So recently, last year, the government in India has started a specific, matching mechanism where these invoices, when they are received, needs to be accepted for the purpose of availing credit of taxes that you have paid to the supplier. So e-invoicing is just the starting from an India perspective. And now we have reached a level where it's a real-time data availability to the customer, that what are the invoices that have been raised against you. And basis that there are multiple things that are being done on that, be it working capital management, stock management, and the likes. So the idea was to just mention that e-invoicing is something that is a good initiative which helps the business maintain and manage their various aspects very nicely. So next slide, please, Kemi. So how in India, the structure of e-invoicing was a bit similar to what is being implemented in Nigeria. The client CRP systems are integrated with uh, our solutions or the SI solutions that are being called. Government also has an option to directly connect to their system, but the SI solutions or the e-invoice solutions are something that are preferred because they provide a lot of customization and flexibility in terms of various activities that are to be done. These solutions then prepare or convert that data, transform that data into the format required by the government and send it across to the government. We have the concept of GSP, which is the communication mechanism allowed by the government from SIs to the government systems. And then there are invoice registration portal, IRP, where the actual data goes. The IRN and QR code is generated. It is authenticated and digitally signed and then provided back, where there are various validations that are done, similar to what was explained by the previous speakers. That is a unique code that is there and can be authenticated from that perspective. Now, this is then brought back to the invoice solution, that is the SI solution that is there. From there, it is then provided back to the ERP system. Now, this is then issued by the ERP to the customer. So the communication of the invoice is happening from the supplier to the customer. Parallelly, now the government has also started to show it across to the customer where the customer can look at the details and download those details to understand what are the invoices that are raised. However, the responsibility of in providing invoice to the customer is of the supplier primarily. The government is just providing add-on informations. And now all of this information is being used to auto-populate various compliances returns that are supposed to be filed. And the validation of that data can be done by the users, by the suppliers, the customers, and accordingly, any discrepancies noted. So the system is similar. Now, the solution helps in providing connecting to the government system in India, as well as providing certain flexibilities, customizations that may or may not be possible in the ERP, while most of the customizations are possible. But generally, there is a thought from an ERP perspective. Any customization takes time or is a bit complex to do. So those are primarily handled at the e-invoice solution level. Next slide, Kemi. These are the various integration approaches that we have between the ERP system and the e-invoice solution or the SI system. The connection between the SI system to the government is always real time and API based. From client ERP to the solution, it could be either of the three. The first one is the API integration, which is a real time solution in terms of as soon as the invoice is created in the ERP system, the data is moved across within milliseconds to the solution and further to the government solution and brought back to the ERP. So it's a real-time transaction like a phone call. I mean, a very layman example from my end that you make a call, it reaches to the other party's cell phone. The other person picks up the call and you get a confirmation that the other party has picked up the call and you start to interact. It's that real time that is there. Considering India, where the volumes are very, very high, uh, the the average time is less than 1 second for generation of this invoice. Now, obviously, there are volumes that are involved. So in certain timelines where there's huge volume, this could be a bit more, but more than 90% of the times, it is less than a second where this API integration helps in generation of the e-invoice. So it's real time. It is being applied at point of sale terminals, even in retail sector where you can go across, give your registration and get an e-invoice at a real time basis. So the application is completely seamless and within seconds. The second is the SFTP integration or the batch processing that we call it. Here we kind of accumulate the number of invoices generated in a time period. It can be 5 minutes, 15 minutes, an hour, a day. And then as a batch, these are sent across to our e-invoice solution, from where it is communicated to the government solution, IRNQ are generated, and as a batch returned back to ERP. This is where, I mean, the second option is normally used. One where there are, old ERPs or homegrown systems which are not API capable, or there is some issue for applicability of API, or they are okay with a time lag between issue of an invoice in the ERP and getting it, validated and e-invoice generated from the government system. So both the methods are being used quite extensively. Uh, the first one is real time. The second one has a bit of a time lag, which is there, but both of the methods are being used, successfully implemented at multiple places. The last option is the manual upload option. This is available on the government website also, as well as through our e-invoice solution also. These are normally used where if the quantum is very low or if there are certain invoices which are generated, which are out of the system, manual invoices to be done, those kind of things where this manual system is used. These are normally add-on I mean, as a emergency option or fallback option plan B, that this is being used. In most cases, it is either API or SFTP integration that is there. Next slide, please, Kevin. Now, obviously, when this was implemented, that there was a lot of businesses which were not using good systems or complex systems for generation of invoices. There were certain smaller businesses that were also doing things manually. So there was a lot of challenges that were faced. However, from then to now, close to 4.5 years that have passed since then, things are pretty streamlined now, and all of these challenges have been cleared. But I'll still put across what are the things that happened and how they were solved over a period of time. The biggest issue was that how do we connect the ERPs to the government system? Uh, because in the past, there was no requirement from any government authority to have that connectivity between the government system and the ERPs. Further, given the vast number of businesses in India, there were so much variety of ERPs that were there, and a lot of them, I mean, some of the businesses were using homegrown things. So that integration at the first step was quite difficult because it was not a something that people had experienced before. And due to the nature of a real-time perspective, that was the implementation that created a challenge. But over a period of time, with the proper guidance and understanding, things streamlined a bit, and we were able to implement it very quickly with a number of ERPs, different industries, irrespective of the type of ERP being used. So that was something that was challenged at the start. There was some extensions, some allowances given by the government also from a timeline perspective. But I mean, this was a challenge that was there. Then at the first instance, there was a schema that was released with the 130 odd columns, wherein there was a specific type of information that could be used. Once it was launched, when people started using it, there were certain changes to validation, certain changes to the schema that was required to be done. So in the starting couple of years, we faced a number of changes that and updates that were there. So there was a lot of changes in the implementations that were completed. Now, there was the major change that took place. Some of the people connected directly to the government, but when these constant changes came up, they faced it difficult to constantly update it. That's where the e-invoice solution really helped, because a lot of these changes were absorbed by the e-invoice solutions. Because in case of a data requirement or a validation changing, there was not a major change that was required in the integration between the ERP and the system SI or the e-invoice solution. So that was something that where the SI use of SI or the invoice solution really helped. That was how things were managed. Then, because of the fact that a lot of this data was not required to be reported, or it was required to be reported only once a month, so there were a lot of challenges in the data quality. Earlier, when we used to report this data to the government in the return form, there were a number of validations that were not happening or happening at the time of filing of return. Now, this was a real-time validation that were happening now. So therefore, the requirement of updating the masters, the vendor master, the customer master, the item master in terms of HSN and other details was a very, very important task. So this was something that all companies required. We helped them do a lot of master validation and now have integrated that they can constantly update the masters for any and every part. So that was an issue that was faced, but with constant master updations and validations, that was something that we could solve. Uh, India being a very big country, there were certain challenges at certain times in remote locations from a connectivity perspective. But with the better infrastructure and everything, this was improved. There were certain instances in the starting couple of years where there were challenges from a connectivity perspective. The IRN got delayed, the invoice generation got delayed, therefore movement of goods also got delayed due to downtime, due to various other activities. But slowly and steadily, these have been streamlined, and then the government was very kind to help us and be proactive in case of there was a downtime of invoice generation. So they allowed movement without that and those kind of things. So all of that was there, but this is a real problem if the net connectivity or the internet connectivity is a problem, because this is a real-time activity that is there. Then there were a lot of companies who had their internal processes, and this was the most important part, most difficult part, because each industry, each company has their business processes which are defined in commercial terms rather than in the legal terms or the compliance terms. So there were multiple processes, like for example, a lot of people used to generate a lot of invoices at the month end, quarter end, year end, and thereafter these used to be dispatched in the coming weeks or months. Now here there was a system which required you to report it and generate these invoices within a timeline, and these invoices were not allowed to be amended. You could only cancel it within 24 hours. So there were a lot of business process change or behavioral change that was required at various companies. So that was a training activity that we did for multiple companies, where we, told them what is the requirement that is there, how to navigate, how to manage or modify their process to bring in this aspect. This led to certain disruptions also, but this was one of the major tasks where the companies needed to look at their business, look at their supply chains, production, and how is it that the finance and accounts work. All of the processes were impacted because of this, and with the applicability also at the procurement side. Now you got to have an e-invoice from a vendor who is the e-invoice, who to whom this is applicable. All of that validation also took its own time. So this was something that was a major part. Now, obviously, with time it has matured, but this is something that was a major impact that was there on businesses. Lastly, this data that was being generated was humongous. So having that to maintain it properly and then make it available when subsequently the audit or assessments happen or subsequent validation verifications happen was something that was very important. So therefore, the systems, the databases have to be accordingly modified to ensure that this data is retained for that period of time and properly validated, reconciled at all places to avoid any future challenges. So these were some of the primary things that were there. And if I were to single out, process disruption was the most important part, and integration was the second biggest thing because of the customizations at each within each ERP or multiple ERPs that were there. But ultimately, we have come to realize that it was a very good exercise to have. E-invoicing implementation was a very good thing to have, and it has helped streamline a lot of processes within the business which were otherwise inefficient or were not being looked at. So therefore, this is something which is very important and should be done in the right manner to avoid any kind of disruptions or future challenges that were there. That's broadly from my end, Kemi.
Thank you so much, Rahul. Thank you for that rich and practical insight into India's invoicing implementation. It's incredibly valuable to actually see how global lessons can inform our own local approach. Now we'll be moving into our final presentation, which will tie everything together by looking at readiness steps, as well as how KPMG can actually provide companies with the support that they need. Now, to lead us in this is our partner from the Consumer and Industrial Market, CRPS. He's also a lead in the tax technology and transformation practice in KPMG, Nigeria. Please welcome Olufemi Babem.
Good morning, everyone, and thank you, Kemi, for the introduction. Um, and I think Rahul has done a very good job in, demonstrating that KPMG has significant capabilities in terms of helping clients, navigate the journey of e-invoicing. So while this is a new initiative in Nigeria, I can definitely say to you categorically also that we have deep experience as KPMG and as a firm in helping clients implement this change across jurisdiction. Even in our team locally here in Nigeria, we have members we have employees and staff members that have been seconded to other jurisdictions where invoicing has been advanced, and have been implemented. And so we have very strong understanding of what invoicing is, how it is implemented, what the challenges are, and are very happy to bring those knowledge and that deep experience to the benefit of clients here in Nigeria, which is why we decided to hold this session, so that not just to notify you and bring you up to speed on what the FRS is doing, share experience from taxpayers that have implemented like MTN, but also then demonstrate to you that this is an area where our support will definitely be valuable for your business. So what are some of the do's and don'ts? I probably won't dwell on this because of the time. So you ensure that your invoicing solution is properly integrated. You test your system properly. Cybersecurity is clearly at the heart of what you would have to do. Don't issue manual invoices. Don't alter invoices after validation. Those are some of the key things that you need to be aware of. But I think, just to spend a bit more time in terms of how we provide support to companies. First is there are three main areas that we then support clients on. So there's the readiness bit of the work, which has two components. So there's the compliance readiness and there's the IT readiness. And I'll talk briefly about both. And then there is the SI support, the integration support, which Rahul has spoken a bit about, and is a key area. The FRS also talked about it in terms of the steps towards compliance. And then there is the access point provider support. So those are three key areas, that KPMG is well positioned to support you as taxpayers, ensure that you have this seamless journey in terms of your integration drive. And so let me quickly spend a bit of time on the readiness. So the readiness, compliance readiness, like I talked about, the areas that are very important. So you have the current risk analysis, and what usually happens there is that's part of the gap analysis, where you look at what risk are you exposed to based on your current invoicing system, and if the invoice was implemented as of today, what would your risk areas look like? And so that's the first assessment that always needs to be done. And so we need to look at things around your tax codes, around what kind of invoicing methodologies are you using, what are your controls around invoicing. If you remember when Sadiq was making his presentation, he talked about the fact that you now have to accept invoices in the space of either 72 hours or three days. So what are your current controls around invoicing, invoice payment, invoice acceptance? I know that some companies, when you get those invoices, you keep them in a file and then you attend to them maybe 15 days after. That will no longer be applicable. So first is, what is your current risk profile? If invoicing was going to be applied today or initiated today for your company. So we start from that, and then we move into the data quality review. Rahul touched a bit about this as well, where we then look at the tax codes. Remember in Sadiq's presentation, he talked about the number of codes, I think about 83 tax data that will be collected. Some are compulsory, some are optional. And so we need to then look at that tax data and the information that will be transmitted. Is that data readily available within your ERP system? What changes may need to be implemented Are your tax codes properly configured? And so that is another part of that work that has to be done in terms of the gap. I've talked about the test of controls. There'll be requirements for you to train your people, both the tax people, the tax function, the finance function, and even the leadership of the business needs to be aware of this change. Sometimes you find out that when these things happen and you're not carrying along the other parts of the business, you basically be running a race alone that may run into trouble. So what we encourage during that pre-implementation phase is that you sort of implement a change management structure where you are training even the board, carry the board along. This has come to stay. This is the impact, or these are the impacts that this initiative will have on our business. These are the changes we need to make, and this is how we'll conduct our business going forward. So that's part of the compliance readiness assessment and steps that we support companies in then doing. Then you have the technical readiness, where you look at the API, the suitability of the APIs to what you are to your systems currently. You look at your infrastructure. When Shola was talking about the MTN experience, she did mention they had disparate systems, and so from an IT readiness point, we look at your systems. How many invoicing systems do you have? Do you want to have a single source of truth? Do you need a middleware to be built to be able to collect that data and then transmit? And so all of that comes within the IT readiness. There's the document management bit of it. You can imagine the volume of data that is going to be generated from this invoicing arrangement. So document management is also an important part, linking what you're doing now, not just the API connectivity, the invoice generation, but more importantly is document management, because you can't generate all these invoices and not have a way where they can easily be stored, retrieved, and then managed. And then the last bit of it under the IT readiness assessment is the cyber security. This is really a big issue. We all know if, unlike MTN, if you are not going to be running the SI and the APP by yourself, you'll be given access to third parties. And so part of that assessment is how secure is your system, how secure is your data, how vulnerable. So there'll be things around your vulnerability testing and some of the other things that you need to do just to ensure that you are not unnecessarily exposed by implementation or by giving access to either the SI or the APP to move your data to the FRS. And so as a service bucket, it's important that you are prepared before you then engage the SI, and that's the system integrator in this case, and the access point provider. For the SI role and the access point provider role, KPMG also, as Raul has demonstrated, we have significant experience in helping clients implement systems, whether locally or abroad. We've done a lot of implementation of ERPs and specific softwares that clients needs to implement. So that's an area where we're very well positioned at, and we're also working with partners to ensure that we can achieve both. So we definitely have again, deep experience. We have the resource, we have the people, and we will be happy to talk to you individually or to your company, group of companies, on how we can help you get this going. FRS has talked about the rollout and implementation plan, right? And that's something that we believe, working with them and working with the FRS, we can help you then establish this. So that's how I'll summarize the presentation. Kemi, I think I can hand over to you now, and then wait for the questions if there are any questions and answers. That I need to attend to specifically. Thank you.
All right, thank you so much, Femi, for the enlightening presentation on how we can actually support clients and companies. And a big, big thank you to all the presenters for the insightful presentation on invoicing. Just a reminder for everyone to download the newsletter on invoicing. This would be put in the chat box. So please download the newsletter on invoicing. It provides apt insights on what invoicing is, the regulatory requirements, and much more information that you have already heard within this session. So before transitioning to our panel discussion, we would like to get your feedback on the session so far. So we have on the screen a link. So if you, a QR code. If you can scan the QR code and then fill in the form, we would greatly appreciate it. The link is going to be included in the chat box. So we would give around 3 minutes, 3 to 4 minutes for the audience to scan the QR code and fill the form. Thank you as you do so. Okay, we have 4 more minutes or 3 minutes thereabouts. Please scan the QR code or use the link to fill the feedback form. Please, if you have any questions, please put that in the chat. We are moving into the panel discussion where the live Q&A segment starts. And so all your questions would be attended to during that session. We have 2 more minutes before we move to the panel session. Let's keep putting in our answers. Let's scan the QR code or click the link. Another reminder, please download the e-invoicing newsletter. We had put the link also in the chat box. Okay, we have 1 more minute. 1 more minute. Okay, So we will now be transitioning into our panel discussion where we'll bring together experts to unpack some of the key issues raised so far and answer your questions. Please continue to drop your questions in the Q&A section or in the chat bot. Now, to moderate the panel session, please join me to welcome Onyeka. She's a senior manager in tax financial service industry here in KPMG, Nigeria.
All right.
Okay.
Okay. All right. Thank you very much, Kemi, for that introduction. We would now be going into the panel discussion. We have, I know a lot of us are more or less itching to, get all our questions answered. And we'll try as much as possible to address as many questions as we can during this panel session. And of course, if we're not able to do that, we would find a way to communicate your answers to you. So for the panel team, we'll be having a number of team members, players that will be answering your questions. Many of them are the people that have presented during the presentation sections today. We have Mohammed Bawa, which we have already introduced. We have the FRS consultants, Mr. Sadiq Arogu Dade. We also have the KPMG tax technology partner, Raul. We also have the team from MTN Communication, led by Olushola. Then we also have Femi Babem, the tax partner in KPMG. All this will be here to answer your question. Then the addition we have is Mr. Mbami from FIRS as well. He's the new addition to the panel team. So we'll all be taking the questions that there are. Okay, so so as not to waste any further time, we'll just go straight into the questions. We see that a lot of questions have been posted on the group chat, so we'll be taking the questions as they come. Right, so the first question is in terms of what the scope for invoicing is. Specifically if invoicing relates to sales, right? Or if it's going to be for supplier invoices or even both. And this is following the questions that, have come up during different stakeholder forum that has been done by the FRS, where there were discussions about, the deductibility of, your transactions if it doesn't go through the invoicing, platform. I think to answer that question, I can hand over to Mr. Mbami to answer that question. Yes, good morning, sir. Are you on the call? Please unmute your mic.
Well, I'm actually on the call, so sorry.
Okay, that's fine. Are you ready to take the question, or would you like someone to take the question on your behalf?
You can actually take it again so that I can follow up.
Okay, all right, not a problem. So the question is what the scope for e-invoicing is. The question more or less is, would it be on sales invoices or suppliers invoice? And this is a follow-on the conversation with FRS at the different forums that were had, where the FRS has stated that invoices that typically do not go through the invoicing platform would not be allowed as a deductible expense for tax purposes. So more or less, they just want to understand what the invoicing will cover.
Thank you. I got the question quite clear. The e-invoicing is actually aimed at covering all business transactions, meaning inbound and outbound. But based on what we currently have, the phase deployment approach, the issue of enforcing admissibility of an invoice for tax purposes is limited to the large taxpayers for now. The focus for implementation of the e-invoicing now is to ensure that you comply with all outbound invoices, that is, invoices that are going out from your company or from your business. If you are in the large taxpayer segment, you must ensure that they comply with the e-invoicing standard. And once you're able to issue invoices, that is outbound invoices that comply with the e-invoicing requirements, at the latter end, as the phased deployment approach rolls out to other sectors and segments, that is when, whether outbound or inbound, and the admissibility of a particular invoice for tax purposes would be considered. So currently, I would say we are just at the early stage of implementation of this mandate. But once the e-invoicing solution has covered 80% of the business activities in Nigeria, it will be required that both inbound and outbound invoices, and also invoices to be admitted for tax purposes, must pass through the e-invoicing solution before it would be accepted as a tax allowable deduction, as a cost of sales, or as an expenses. Is very important. But that enforcement is not now. It's at the long run. Thank you.
Okay. Okay, that's noted. That's noted. Okay, so the next question will be for the technical comments, Mr. Sadiq. This question is from you, from the group, from the chats. And the question is more or less, I know there were conversations around, the information that the FRS intends to, more or less review. And there were also discussions around there being a cryptographic stamp that will be attached to the invoices. Now, the question from the team or from the chat is, what are the measures that the FRS intends to put in place, to ensure security and confidentiality of the data that will be transmitting, especially for, high sensitive taxpayers like the banks and other financial institutions. And also, what is the FRS more or less doing with respect to that?
All right, thank you, Munyeka. During my presentation, I mentioned the separation of concern. So we have NITDA as part of the member of the invoicing ecosystem. So NITDA is the National Information Technology Development Agency. What they have done on the FIS MBS is to ensure data protection and regulatory compliance within the enablers of the service by enforcing that the system has passed through a VAPT assessment, which is the vulnerability and penetration testing, that every members, whether you are a system integrator or access point provider, as long as you fall within the service provider group, they make sure that the ISO certification you have the ISO certification, and on the system part, we ensure end-to-end data encryption for all data exchange via a secured API. There is IP whitelisting, there is a proper handshake within the system. Then we also incorporated a tier access control with strict authentication protocol. And one of the most important things that we've also done is to make sure that is a proper audit login to ensure full traceability of every submission and also validations of invoices. Then taxpayer environments are logically separated to safeguard institutional data and prevent cross access. So for bank, there are specific bank grade encryption. For manufacturers, there are also types of encryptions that we've also adopted at that point. I've mentioned the ISO 222 for financial messaging standard. That is for financial institutions and for large taxpayers as like the banks. So we make sure we ensure all of this, and then NIDA is at the forefront of it, ensuring that those standardizations are met.
Okay. Okay, that's noted, Mr. Sadiq. So the takeaway is that there is currently a framework by NIDA to ensure the security of the data that will be transmitting to that. And also FRS has also put in some, would I call them, some strategies in place to ensure that that is also checkmated.
Absolutely.
Rather. Okay, that's noted. So the next question will be for Mr. Bauer. Right. I know there were a number of questions or comments around the timelines provided by companies in the sense that you more or less have a timeline of 1st of July for larger companies. So the question now is, what would be the timeline for what I call them smaller or medium-sized companies, because they also want to start preparing for the whole invoicing agenda as well. So they would like to have an idea on that.
Okay, thank you very much, Onyeka. So with respect to timeline, for the medium and smaller taxpayers, so we're not saying currently they cannot be onboarded. So if they want to, they can be onboarded. But based on our timeline, we will commence their own specific engagement process, because we've been doing a lot of engagement, but tailored to the large taxpayers. So we're not calling the other segments of the large.
Hello, Mr. Bauer.
The large taxpayers we expect.
Okay,
Can
we
you
lost you for a. Yes, I can hear you now. Lost you for a bit.
Okay. So for the large taxpayers, it will take us, the deployment will take us through December 2025, and then by January 2026, we will commence with the medium large taxpayers. We will commence full engagement with them, and also deployment to medium and large taxpayers. So that will take us through 2006 till December, and then by 2027, we will extend to the informal sector, largely the emerging taxpayers. So that is like a 3-year plan, right? 2025 for large tax, 2026 for medium, and then 2027 for the informal. But that does not mean that even as we're doing the large taxpayers, we cannot, they are also encouraged to come in, in the process. Yes, thank you.
Okay. Thank you, Mr. Bauer. So just to get you right, the plan is between January 2026 to December 2026. The plan is to go into the medium-sized companies, right? Then from 2027, exactly, you now go into the informal. But however, any taxpayer,
yes.
Any taxpayer that is willing to start off the process, both small, medium, or the likes, can actually start off the process. Okay, that is not.
Yes, as a matter of fact, we've had a lot of inquiries from medium. In fact, some of them have been onboarded, but we're saying for now, very soon, we're going to come up with a public notice, basically for the large taxpayers, and it will be made mandatory anytime soon, and then with a clear timeline for integration and all that. So something similar for the medium will come out in 2026, right? But of course, during this enrollment process, any taxpayer, irrespective of your turnover threshold, your category, you can get onboarded and start transmitting your invoices.
Invoicing. Okay, that's noted, sir. That's noted. Okay. So for the next panelist, I'll be going to a question for MTN, which is led by Olushola. And this question is more or less just to understand, what benefits you have seen come out as a result of your, integration to invoicing. I know during this presentation, we've said quite a number of things around the benefits that invoicing brings to taxpayers in terms of, streamlining your process, improving efficiency of your process, and so on. But I would like to hear specifically from you, what are the key benefits that you have noted for your business operations after you have adopted the invoicing system? Yes, over to you, Shola, please.
Okay. Okay, I'm gonna need to take a minute because we are currently observing a 1 minute silence for a departed colleague, but we can come back to that question.
Oh, sorry about that. Should we give you a minute?
Yes, we can move on to the next question while
The next
she observes.
question.
Yes, she'll come back.
Observes that. Okay. I'm sorry about your loss, Shola. Okay. We'll go to the next question. For KPMG India, Raul, this question is for you. I know during your presentation, you spoke quite a bit about a lot of the challenges that you faced, or I mean, taxpayers generally faced during this integration process and all that. But my question specifically is, in terms of the involvement of tax authorities during this integration process, because we like to understand, or if there are any takeaways that our own tax authorities, especially the ones that are on the call as well, can actually take away from your presentation, how the tax authorities were involved in this whole implementation process, especially if they provided some kind of technical, or would I call it financial support for companies that were integrating, so that the impact of the invoicing is not particularly felt, and if they decided to do the phased approach, as we have also seen in the presentations we have today. I don't know if you have any questions to that or any answers to that, Raul.
Yeah, so from a government perspective, tax authorities perspective, so very clearly there was no financial support that was there, but from a technical perspective, they had employed one of the large IT firms, Infosys, which has partnered with the government tax authorities to kind of set up all of their systems. So from that perspective, technically they were at the forefront of all issues that were there, and in case there were any challenges that were being faced for integration in terms of any schema related things or any access related things, connectivity related issues, they were very approachable and they were helping that out from that perspective. So as a SI and APP, I mean, from India perspective, that is ASP and GSP, we were interacting with the tax authorities, getting all the things resolved. And once the connectivity was established at our end, thereafter integrating with the client system did not really require any communication with the tax authorities. The tax authorities provided us access to their sandbox environment, testing environment, as well as production. And that was something that really helped in testing things out in time and getting the integrations and invoicing built up on time. I mean, we were interacting quite extensively, and the first e-invoice that was issued in India was issued by KPMG with the tax authorities, which is something that we can highlight from our perspective. But tax authorities access was a very important factor, and technical help was the second important factor that was there.
Okay. Okay, that is noted. So the technical support that cannot be overemphasized. That is noted. Okay, all right. Thank you very much, Raul, for your comments. I would now be taking the next comments or the next question for Femi Babem. And the question more or less is following on your presentation. I mean, you made mention of the need for having a tax code alignment in terms of mapping your transactions to the specific codified or the specific codes that will be issued by the FRS and so on. But I think it's also important, and this question is also coming to provide further information on that, to understand what what in your own opinion is the interface between the tax and accounting functions with this whole IT integration process, because one of the things that we see play out from a number of taxpayers, and the questions that we also see coming in as well, is the fact that they believe that, oh, once I have this information with the system integrator and the information is, more or less uploaded to the FRS's portal or the FRS's platform, then I'm good to go. So I think it's probably just to provide a bit more clarity on, what you believe is the interface between tax and accounting functions with the IT integration process as a whole.
Okay, thank you very much, Onyeka. And I think one of the common mistakes that I hear and we sometimes hear as a firm when we engage with taxpayers on e-invoicing is the fact that they believe it is more of an IT initiative rather than tax and accounting. And I think it's a very difficult way to look at it. E-invoicing should not be an IT-led initiative. It should be led by the tax and finance function. It's a responsibility of the tax function, especially, to ensure that the e-invoice initiative is correctly implemented, strongly supported by IT. And the reason is the information, the data, and all of that will be collected by the FRS will be the responsibility of the tax person or the tax head, and not the head of IT. In other jurisdictions where this has been applied, tax managers in some jurisdiction where the survey was done, tax managers spend as close as 80% of their time on just reconciling data that's been collected post implementation, and that's because I think it was Sadiq who talked about it in his presentation, that where this will get to eventually, where the invoicing will get to eventually, is the point where you have pre-filled VAT returns, right? So that data you've provided is the returns that the FRS would believe you should file for the month. And so your returns are already pre-populated. All you need to then do is confirm, verify by submitting the return. So that data has to be properly, the data you are transmitting has to be substantiated, has to be clear, and has to be correct. So avoid the effort you then have to put into reconciling post-submission. The FRS have talked, you only have 3 days to confirm whether a transaction is correct or not. Shola talked about the fact that they had to ensure whether credit notes, debit notes have to be captured in. Those are details that the IT team probably won't have very strong knowledge about. But as the tax lead, as a finance lead, those are details you need to do to ensure that are captured with the help of the IT team, ensuring that the detail and the information that you're transmitting to the FRS is a complete picture of what your revenue numbers should look like. So there's that handshake. It has to be finance and tax led, but strongly supported by IT.
Okay, all right. Thank you very much, Femi. So I think my takeaway from what you have said is that this whole invoicing fiscalization process, there has to be a handshake between both the tax and accounting as well as the IT or finance, or as well as the IT team, so that taxpayers can ensure that information that is being transmitted to the AFRC system is correct and we don't have issues of reconciliation afterwards. So that's my takeaway from that. And thank you very much. Thank you very much for that answer. I will then be going to the next question for FIRS.
Sorry, Shola is back. Shola is back. Do you want to take that question? So, yeah.
Okay. All right, that's fine. Shola, can I go ahead with my question?
Yes, please.
Okay, all right. Thank you. So my question was based on the fact that during the presentations at different times where we saw the introduction from Wale, and also the FRS also making comments around the benefits that, gets the taxpayers in terms of implementing e-invoicing. So my question is, from your own personal experience, what has been the benefits for e-invoicing for you? Because I think that, there are a lot of conversations around e-invoicing will help you streamline your process. It will help for better operation efficiency and so on. But I would like to have your own personal experience on what e-invoicing means to you and how it has also impacted your business generally. Would you?
Thank you, Onyeka, and thank you for your condolences. And thank you, Femi, for chipping in. Okay, so for us, we already had a very streamlined process, but we are still enjoying benefits of the e-invoicing, one of them being the standardization, particularly the international standardization of these invoices, right? So now we are not restricted to our invoices only being valid in the Nigerian economy. Anybody who is receiving this invoice can tender it anywhere in the world as proof of transaction, or either proof of value received or proof of value delivered, right? That is one. Secondly, I mentioned earlier that we have quite a number of invoice generating channels, each of which is unique in its own way, based on the type of transaction that those departments handle. What e-invoicing has afforded us is a way to standardize how all those departments would deal their transactions. So we now have major buckets where the transaction has to fall into. Are we treating it as a prepaid invoice, as a postpaid invoice, as a value on delivery kind of transaction? Is it a credit memo? Is it a cashback? Is it a debit memo? Now we have had to look into our transactions, right? Our invoice transactions, and clearly define where each of these transactions fall into, so we can better align it with the e-invoicing expectation. Future benefits that we are envisaging are, one, a reduction in the recurring audits that we have to go through. As a large organization, I can assure you it is not fun. The number of times that we have auditors coming in, if they're not auditing this kind of transactions, they're auditing that kind of transactions. And it's sometimes you feel like auditors are literally a part of the staff core role here. That's how much, or that's how often we have audits going on per time, right? So we are envisaging that there will be a huge reduction in the volume of these audits because there's now transparency. What we are issuing is clear. FRS is getting a near real-time view, or a near real-time look into our transactions. So it's not, I think currently the tax remittance timeline is about 30 days. So you have a 30-day window, all your transactions, you put them together and you remit. But with this e-invoicing, it is going to be so much more transparent. We don't have to wait till the end of the 30-day period to start saying, oh no, this VAT is not accurate here. This one should not have been a VAT liable transaction. And also for withholding tax remittances, now a lot of companies have to wait till when we are doing our withholding tax remittance. And I'm talking about the payable side, right? A lot of our suppliers have to wait for when we are doing the withholding tax remittance to challenge what has been deducted, because we know we have different rates for different kinds of transactions. But with this, everyone is saying upfront what is expected, right? The same thing goes with withholding tax expectations on the invoices that we're issuing out as well. Right from bat, we can tell, oh, this is our current standing as regards withholding tax remittances that has been done on our behalf, and this is what we are actually seeing on the FIRS platform. So basically, companies don't have to wait till the remittance has been completed to know what their current stand is. Now, another thing is, as it stands, the previous standard, or the general standard, is when you issue me an invoice, I don't have to confirm the invoice or deny it. I get the invoice and I just pay, or I dispute it. But with this e-invoicing platform, there's now also that transparency from the FIRS stand, which says, okay, it's one thing to issue an invoice to a customer, it's another thing for the customer to actually receive that invoice and admit that yes, they have received value for that invoice. While for large companies, there might have been a process in place for confirming receipt of value. For smaller businesses, that is not always the case, and this would also, help bridge that gap. There's so many other benefits, but I think this few I would keep for now.
Okay, thank you so much, Shola. I mean, you've said a handful of things, and there are a lot of things that I took away from what you've said, in terms of standardizing your process, providing transparency, and hopefully, reducing the number of audits you have to do as well. I mean, it's a lot of insights to take out from that. All right, thank you very much. For the benefit of time, I'll take a few more questions. In terms of, first of all, in terms of the adoption of invoicing, I think the question really is what the FRS intention will be in terms of when companies, transact with the likes of artisans and so on. So is it really a case where the FRS is saying that because this is mandatory and everybody has, or every transaction has to go through this invoicing solution, then, companies or smaller businesses or artisans, as the case may be, that do not particularly have to, or go through the system? Is it that you are now saying that maybe businesses would more or less not particularly deal with that? And in follow on to that question, would FRS provide a form of manual intervention, for maybe those smaller companies, so that those ones that do not particularly have to go through the invoicing integration, that's the ERP integration, can now then actually explore that manual upload capability? I don't know if you got my question. I think this can go to Bami, if or any of the FRS official that would like to take that, if that's okay.
I got the
Bami,
question
okay.
quite clear. Yeah, I'm with you. One key thing
Would you like me to okay.
Yes, one key thing about the e-invoicing in particular, it's actually to formalize most of the businesses today that would classify as informal. In real sense, the reason why they are classified as informal is because we don't have the economic activity within that sector. So the e-invoicing is not just coming on its own, but there are other solutions, also other value-added services that will actually come with it, which can cater to each segment of the businesses that we currently have in Nigeria. For most of the large taxpayers, we are aware it's either they have a custom-made solutions, or they are patronizing some of the solutions that are provided by the OEMs, which makes it easy for the deployment of e-invoicing in that particular sector. But delving down to the emerging taxpayers or emerging businesses, once this solution is deployed and is made mandatory, there will be value-added services that will be provided by whosoever sees an opportunity to key into such sector and onboard those segments of taxpayers, as is applicable globally. Like in India, the examples are there. But the plan is that as much as possible to minimize any manual entry of data, because we know what goes with it. But there will be innovations around e-invoicing to actually cater for that segment of the economy. Currently today, the quantum of transactions or economic activity in that sector that is termed as informal, if they are actually formalized or transparency is brought into it, you discover that a larger chunk of activity actually happen with it. The only challenge that we visibility to what they do. Facing is actually coming in to bring about that visibility that is required. So a lot of businesses would actually come with solutions either for free or for a paid service, where they can actually give most of these businesses who don't have the resources to acquire ERPs, or they don't have the resources to custom build ERPs, but there would be a commensurate solution that will be provided to cater for them to ensure that they are onboarded on the e-invoicing platform as required as time goes. Thank you.
Okay, all right. Thank you very much, Mr. Bami. I think in due course, those value-added services and also the other method that taxpayers can actually would be properly communicated so that they are aware of it.
Onyeka,
Okay,
just also in addition to what Mbami said, and you see that's why we're deploying in different segments of the economy. So to your question, whether we're open to doing manual, so if you've seen what the Indian experience, they have like three different approaches of exchanging this data. So the reason why for now we're saying is only API based, because we know that most of the large taxpayers have an organized system, billing system that we can do this integration. As time goes on, one will begin to engage lower categories of the taxpayers, like the medium and small, and we are getting feedback for us to adopt other approaches to make it easier, to make compliance easy. I can assure you that we're open to adopting other approaches just to make sure that compliance becomes easy for every taxpayer. So it's a gradual process and it's a journey. It's not just a destination, and that's why even using the data for tax purposes, we cannot give a timeline for now until we're able to, achieve certain milestone, with respect to compliance level. So this is still work in progress, and we're partnering with everyone, including KPMG, all the taxpayers, different government agencies to adopt different approaches that will make compliance easier for all. Thank you.
Okay, thank you very much, sir. Thank you for that feedback. Okay, that's noted. And I think the audience is also hearing that as well, so that, they can have an idea of what to do next in terms of that. Okay, so my last question is for transactions that are considered unreceipted, where taxpayers do not particularly have to raise an invoice. And we see that happen a lot of times, especially for financial institutions like the banks, fintechs, and so on. I think the question is, with e-invoicing, is it mandatory that those kind of companies that do not particularly invoice their transactions will have to do it? And if that is not the case, what is the expectations from the FRS to account for those kind of transactions? Because I see some of them are not very clear on, do they have to, raise invoices? Those transactions are more or less automated. So I think would like the FRS to provide clarity on that. And I don't know, Mr. Bami or Mr. Bawa, whoever would like to take that.
Yeah,
please.
yeah, Mbami will speak to it, and then maybe Sadiq will also add. So Mbami, maybe speak to the business aspect here.
Okay, thank you. Regarding the fintechs in banking sector, where most of their transactions are automated, as long as you're running business, it's quite easy for you to study the schema and understand the kind of information that are needed for your invoice or for your electronic notification to customers to comply with the invoicing requirement. As per invoicing requirement for those transactions that is from business to customer, which does not require the customer to accept or reject such deductions or transactions, particularly for the banks, when you charge for service, ATM maintenance, and co, in which you only notify the customer about the deductions in his account and the reason for those deductions. Those deductions in the cost account, so definitely expected to account for them through the e-invoicing platform. However, the aspect of the e-invoicing reporting that we will be doing for such class of transactions is fiscalization. That is reporting the income that you earn through that. Such transactions will not require the customer to either accept or reject the invoice. It is for his own information that so amount has been deducted and has also been fiscalized for tax purposes. So it's quite different from transactions that are happening from business to business or business to government, which require issuance of invoice sections, amendment, or co. So it's quite easy for them to implement. One key thing is stated by our technical part. So the fintechs have not actually come forward, very few of them, but it's better that they consult or book a session with the technical team so that they will have opportunity of capturing all their peculiarities in their business before the e-invoicing becomes mandatory or enforcement comes on board. Because at this pilot stage, it gives room for us and also the technical team to understand the peculiarity of your business and address it once and for all. Just as we had the pilot taxpayers that we worked with, a lot of the peculiarity of their businesses were addressed, and as of now, you can see their testaments about what was done that they were able to gain. Text and those ones in those areas to come on board, particularly for pilot. Some of the peculiarity of their business combinations would also be captured in the e-invoicing platform from now, because once it goes live, you have little or nothing to do rather than to struggle to fit into what might not actually cover your business interests very well. Thank you.
Onyeka, just to add to that, the question you asked has been very, a lot of the fintechs and banks have asked similar questions and we've answered it very well, just like Bami said. So what I'm just saying in essence, just to assure you that it's not really a problem, because currently we have some banks that have onboarded and we're doing the integration with. And actually, this kind of transactions are even the easiest to do the integration with, because they are what we call the simplified invoice. From Sadiq's presentation earlier, is the B2B that has more information on the invoice. The simplified invoice, it's a straightforward invoice. You don't have to include the thing of the taxpayer, the customer, and all those things. So it's a very straightforward transaction. It's what we call the fiscalization reporting. So we've answered this in several engagements that we've had with the different taxpayers and also individually with the specific banks and financial institutions. We've had a lot of engagement with them. So it's not a concern, really. So I can assure the person that asked this question that all he needs to do is just book a session with us. We'll explain to them how easily they can do this technically. So I don't think we have to spend more time on that. Thank you very much.
Okay, thank you very much, Mr. Bami. Thank you very much, Mr. Bawa. This is noted, and I understand that fiscalization would be the avenue which the FRS intends to capture those unscripted or unreceipted transactions. Just one more question, and apologies for taking additional time, but just to confirm, Raul, this question is specifically for you. I would like to also know your experience for India in terms of this kind of transactions whereby they are more or less not invoiced, like we have stated for the financial services sector. Just to get an idea of what applies within India for you. What is the specific experience that you have on that? Thank you.
Right. So specifically, the Indian government understood that this is a area which is a challenging area. So at the initial phases, they have exempted certain specific sectors, financial sector being one of them. That is, the banks who are not required to raise an invoice are not required to do e-invoicing. So similarly, some of the other smaller, similar sectors like telecom, etc., were also something that were pulled out of it to avoid a large scale challenge from that perspective. However, with things now being, they are talking about bringing some of these also under e-invoicing. But yes, to start with, all of these sectors which traditionally do not issue an invoice, they were kept out of e-invoicing, and very clearly that benefit was extended.
Mm. Okay, that's noted. Thank you very much for that feedback, Raul. Thank you. So this brings us to the end of our question and answer session, the panel session. Apologies if we're not able to take your questions or I know a lot of hands were raised as well. Because of the timelines that we have to conclude, would have to end the panel session, for now. But during the registration, we have access to, your email, so we can also drop some additional feedbacks. And, I think the newsletter as well that we shared will also provide some further insights on, the invoicing and all. And FRS has also said that they are open. KPMG is also open to, answer any questions that you may have regarding that. So thank you, everyone. So we'll just be having the closing remarks at this point. So we just want to thank everyone, the presenters, for sharing their expertise, their insights during the presentation today. There was a lot of learnings for me as well, and I hope the audience was also able to pick one or two things from the presentations today. And I also want to specifically, thank the audience for making out time to participate in this session. Your contributions, your questions, your comments, feedbacks, and all made the presentation, made the webinar very, very enriching and insightful as well. So we just want to specifically thank you for that. From the presentations we had today, we've seen a lot of takeaways from the FRS in terms of, the compliance requirements, in terms of, the timelines that are being provided for the e-invoicing integration. We've also been able to, get practical experiences from people who have also gone through this e-invoicing process, like the likes of MTN, who has shared not just their practical experience, but some of the benefits that they have also taken out from the e-invoicing integration as well. And also from the presentation from Raul, we see that, e-invoicing is not just a Nigeria initiative, it's a global initiative. And as such, companies, would be expected to comply, in terms of that, to improve transparency and reduce any form of leakages in terms of revenue as well. Right. So it is very important that companies, that feedback is provided to, the different companies that you work on to ensure that, you align your business objectives with the regulatory requirements that are there for you. So for next steps from the presentations that we have all listened to, it is important that you more or less start today to conduct a system readiness assessment. You would need to assess your ERPs to ensure that your ERPs can actually, accommodate the e-invoicing system, right, from an IT perspective. And in addition to that, right, there has to be an alignment with tax, because it's not just enough for you to be able to, transmit the data. You need to be sure that the data that you are transmitting is correct, is accurate, so that you do not have any other issues in terms of reconciliation and or whatnot afterwards. And of course, the main implementation will then proceed as well. So please, thank you, everyone. Please feel free to reach out to any member of the tax technology team, if you have any further questions. And of course, FRS as well needs to be engaged during this process to ensure that there are no issues or lapses along the way. So thank you, everyone, and I appreciate your time. Do have a wonderful day. Thank you.
Thank you, everyone. Thank you. All right.
Thank you.